Greetings, members one and all of the Salivation Nation. We all know that silver is sustainable in an unsustainable economy, and when our politicians and central bankers are doing everything they can to prevent any kind of movement towards a healthy economy and sound money, it makes you wonder why the debt clock is crashing. We're at $987 silver, so let's explore. It has been a while since I have updated this series, but we have just now seen the national debt increase now above $31 trillion. It's actually $31.1 trillion right now. Plus, the number keeps on ticking like crazy. And of course, we all know that that seemingly is unsustainable. Look at the U.S. federal debt to GDP ratio from where it was in 1960 to where it is now. The total debt to GDP ratio is at an amazingly alarming high number here to 139.62%. This is some new information that has been put on here since this website was created. Now, where they actually source all the information, when you highlight over each of these little numbers, we get information pops up there at the top, like the spending to GDP ratio. And that's pretty insightful. You can look all this stuff up here, but let's take a look at the number that we like to talk about on this channel for this series of videos. We're seeing the dollar to silver ratio fall dramatically here. In fact, we can see it's $987 per ounce. Now, before I continue, I always have to say this in this series, and we're going to look at past videos in this series because I have a playlist of all of these videos, but that seems like an awful lot for silver per ounce. This is not the price of silver. This is not any indication of where the price of silver should be or would be. What this does is this tells us how much money is printed, how many dollars are printed compared to how many ounces of silver are mined per year. Look at this. Look at your top of your screen. The year-over-year increase in the U.S. M2 money supply divided by the yearly world production of silver in ounces. So there it is. It's where it is for annual increases of the increase in money supply. That's a lot of dollars printed per ounce of silver mined per year. That's a high number, and it has been for quite some time. However, if we look at it compared to other numbers, if we look at this playlist, I've documented this over the years. This is the playlist of all the videos, and I encourage you to check it out of all of the ones that I've done throughout the life of this channel. Started, a number of years ago. So we started it out at $844 per ounce. We've moved up to $918. It didn't take long, and we haven't seen triple digit, and on quadruple digited from this early video here. And then it all went into quadruple digit silver throughout this time. In fact, it got up very, very high. I think the high I got was $5,121 silver. Boy, I tell you what, it has taken over that particular video, so check that out. So what is behind some of these numbers? Again, I cannot emphasize enough about how this number is calculated. It is not what silver's price should be. It is not a spot price indicator or a prediction. It is simply something that tells us a little bit about a money supply. And so we have to look at mine production here. The Silver Institute has the latest that I've been able to find is how much silver has been mined year over year. We can see that it has increased in 2021, a 5% year over year increase. So that is playing a role in probably where those numbers lie. Probably estimates from the USGS, and those numbers come out that are produced, and they probably calculate based off of that. And then we have to look at the M2 money supply. And here we can see it. This is directly from the Federal Reserve, and we can see how they've been printing money, how the M2 money supply has been printed out over the course of all of these years. This is what leads to inflation, folks. When they keep on printing money through all these recessions, it just keeps going and going and going and increasing and increasing and increasing. And then it went into overdrive in 2020 because of the pandemic. So let's go ahead and narrow this range a little bit here and see where we are at since about 2020. A pretty steady incline and then into overdrive in 2020. Let's narrow this down and squeeze this in because we can see a little pattern forming here where for the first time it is actually leveled out here. It has leveled out, but all of that money still being printed, just the rate of growth has fallen. And so, in other words, we are seeing this, if we can look at this top ledge here, for the first time we're seeing it flatline. I've never seen this before where it's actually flatlined, which means they're still printing money. It's not decreased the amount of money in the supply. And by the way, you know, how many of you have seen any new bills that come across your desk with the new signatures on them? Not very many, not at all. And why is that? Well, it's because we've not had a new treasurer yet. And now we do. This just recently happened within the last month here. Malerba was sworn in as first Native American U.S. treasurer. Of course, you know, this current administration, they like to put racial politics in everything. They're going to get every kind of identity politic they can get, including the treasurer. But nonetheless, we do have a new treasurer now. And so that means that Marilyn Malerba's signature will be on the new notes. But likely, probably, they're still printing notes from the previous treasurer's name on them, even though we haven't had a treasurer since, I guess, since Biden took office, at least from what I've been able to find there. But pretty interesting indeed. But there it is. So what's happening here? The money supply is kind of about the same for them too. But there's other monetary supply being printed too. There's M3, there's M1, and the like. But this is the most common that most people think of. And so when it's flatlined like this means that, well, it could be skewing these numbers a bit. And again, I'm not sure exactly how they're calculating all of it, but it does not mean that the money supply is decreasing. They're still printing all these notes, but it is flatlined here. And so that could be playing a role in why it's $987 per ounce. In other words, 987 $1 bills, like the one you're hearing right now, that are printed for every ounce of silver mined year over year. Now, one of the things we have to take into account here is where is the silver production, and we just looked at that to see how much silver is being produced, more of it's being produced. So 5% from last year, and a lot of that is recovery from the pandemic and the like. And so now we're starting to see more silver coming into play. There's a lot of demand for silver, especially with coins, rounds, and bars. And some of the supply chains are coming back, although some say that it'll take quite some time for that to happen. And so there's not as much demand in the industrial sector, which is one reason why the price is so low. But nonetheless, it's very interesting. The COMEX and the LBMA, as we know, those vaults are dwindling in stocks. So why is that? And where is this other silver? So it's fascinating to see how this is rolling out. But the thing is why I like to do these videos, to see what are the trends, what is contributing to the numbers being the way they are. And we can see the number has gone down dramatically. Look at the dollar to gold ratio. There's a lot of dollars printed per ounce of gold out there, which indicates that gold is rare. There's not a lot less gold mined per ounce. And so it's fascinating indeed. Another number I think is important to look here is the amount of derivatives out there. The paper to silver ratio. For every silver ounce of silver, let's see if we can get this to show up here. For every ounce of silver mined, the number of paper silver ounces traded on the major world silver exchanges divided by the actual world production of silver in ounces. The actual world production in ounces of all time. And you can see that there's a lot more paper silver out there. The derivative market is insane, folks. And I think that is part of the contribution to why the price is so low. And one could say, well, that's manipulation right there. For every time this increases, that's probably the best example of price suppression that's out there, because the more of these paper representations or exposures to the silver market that are out there, the more of those that are out there, the less likely, just like with inflation, the less valuable they're going to be. But the actual silver itself, well, we see what's going on there. Silver is premiums are through the roof right now. And so people are paying a lot more, well over $30 for some of the more premium type or the more desirable silver products that are out there, like Eagles, Maples, and the like. So something to consider here, but nonetheless, the debt clock essentially is crashing now compared to what we've seen in the past, as documented on this channel. Look at these higher numbers then. And that is, I think, because of the interest rates, the Fed raising interest rates and tightening monetary policy, which we've not seen since really the creation of this channel. We've not seen this. So when you look back to where this is now, this goes back to a time when quantitative easing was just beginning, or at least in the second and third round of it. So there were this numbers. I would love to see what these numbers were, back in 2008, 2009, 2010 even, at the beginning of quantitative easing. And in reality, we have a mixed bag right now in terms of where this number is, because we have now more money that's going to be printed, that's going to be going over to Ukraine. An insane amount of money going to Ukraine right now. It's unfathomable to think about that the amount of money going in there, and how much money will be now used for hurricane relief. And so there's more spending being proposed that the politicians want to do. And while the Fed is trying to tighten, the politicians are wanting to print more and more and more. And of course, they want to try to cover that by taxing it, but there's not enough taxes they can collect in order to meet this. Because look at, again, all of the spending that's happening. And that's really where what needs to be stopped, is the incredible amount of spending. And that is deficit spending. And this is the number you see here, the U.S. federal budget deficit here. As long as these numbers keep going up, that's going to make this number go up. And why? Because there's not enough taxation in order to meet that. Look at the revenue per citizen that the federal taxes are providing. That's a small number compared to what this number is. And the debt per taxpayer is almost $250,000 for every taxpayer. It's absolutely insane. And seemingly, it's been talked about as being unsustainable. Unsustainability for this debt per taxpayer now, and for this country. But it can be, obviously it's sustainable because they continue to do it. They continue, and look what happened. If we look back on this for the last couple of years here, let's take a look. In 2020, it was 26 trillion, which is still an insane amount. Let's go back to 2016. It was 20 trillion, still an insane amount. But man, a third of the debt has been created since 2016. And let's go back to 2012, 15 trillion. And let's go back to 2008, $10 trillion. A third of where we are at now, and that's when the first financial crisis came in. And that was at the precipice of the markets and the too big to fail and abandoning the free market system in order to preserve it, as George W. Bush said. Insanity. Let's go back to where it was in 1980, going all the way back, not even $1 trillion. Still an insane amount of money. But look at that. But there it is. There's where we are. There's where we were at in 1980. And so and really, in a sense, this is unsustainable too. But nonetheless, they've been able to sustain it. And where will it be in 2026? $40.4 trillion is where they say it'll be in 2026. And we can also see that when we get to 2026, we're going to hit quadruple numbers again for the dollar to silver ratio. So that is something we can look forward to. We'll get those triple digits again because there'll be more spending that'll be happening. So there you have it. The overall lesson to this series is that you and I, we know that they cannot print silver. So hold on to your silver and understand that its value far exceeds its price. So I encourage you to hang on to it because silver has proven itself over the long course of history to be a preservation device and will continue to do so. Let me know what your thoughts are in the comment section below. Hope you found this video insightful, and I want to encourage you to please rate, share, keep on stacking, and subscribe.